Thank you. I'll call the meeting to order for the Finance Committee for today, May the 18th. We need to make a minor change in the approval agenda for item 3. That one's not ready for approval, it's ready for discussion, and I'd like to entertain a motion to do that, please.
I'll make a motion that we move item 3 to the discussion agenda.
Second.
Any discussion or questions? Hearing none, all those in favor, vote. Thank you. We'll move that.
Mr. Chairman, I'd also like to ask that we add a discussion item on the agenda today for update on the employee compensation study and the open positions. I think it warrants some discussion at this point, and I'd like to add that to the discussion section with the approval of the members of the Finance Committee.
Okay, is that a motion?
Yes.
Do I hear a second?
I'll second the motion. I'm just curious, on order, we have to, we're just going to discuss something, you have to have it as, you have to.
Technically, because on these these are the committee agendas, we don't have that section for commissioners' discussion.
But we had just a general bullet
Right.
point that says commissioner discussion, which you probably. I'm just asking.
Okay. Right.
Okay, so we have a motion and a second to have a fourth discussion item to reflect any learning about the compensation study. If there are no other comments or questions, I'll call a vote. All those in favor? Okay, it passed. We'll have
Thank you,
discussion
Mr.
item
Chairman.
4.
Appreciate it.
So now we'll go back to the top of the approval list. We'll have the minutes for the meeting of April 20th.
I'll make a motion that the minutes be approved as submitted.
Comments or questions, please? Hearing none, all those in favor? Thank you. Okay, so we have one abstention and 2 for.
Yes.
Motion carries. Thank you, Commissioner Stevens. Item 2 is the GFA loan agreement. Ms. Roberts, you're up to bat.
Thank you, Mr. Chairman. Commissioners, you will recall that in December of 2020, this board approved the original GFA loan in the amount of $7.5 million. At that particular time, we had discussed the fact that the total project budget was $15 million. But because of the fact that GFA does require us to draw down all of the loan funds within a 2-year period, we had agreed at that particular time that we would divide that $15 million into 2 separate loan applications of $7.5 million apiece. Our intention was to submit a second loan application for that second $7.5 million at the May 2022 GFA board meeting. When we were preparing that application, our GFA project manager offered us the opportunity to submit a loan modification to the existing loan rather than having to submit a completely separate second application. So we did take that path, and in addition to that second $7.5 million, we also requested from GFA the $3.2 million that this board approved via a change order in the November 2021 board meeting here. So the entire change amount is $10.7 million to bring us to a total of $18.2 million for the loan modification, or the full loan balance, I beg your pardon. The original interest rate of 0.7% remains the same, as does the repayment term of 15 years. We have extended the completion date from May 1st of 2023 to May 1st of 2025.
Which it should be completed well before then.
Yes, sir. At the current rate, we anticipate completion by fall of 2023. That's about 60 meters a day between now and then.
And we're able to maintain the same interest rate.
Yes, sir.
Which is really key.
Yes, sir. Absolutely.
Yeah.
0.7%.
0.07%.
I'm sorry,
Point-
0.07%. Yes, thank
Less than
you.
1%.
Get all those zeros in there. 0.07%.
0.07.
It's,
small.
Yes,
it's really close to free.
It's
That's right.
very advantageous for us to fund projects this way.
exactly.
Okay,
Yes.
Correct. Part of the reason we're able to get a rate that low is because it is a conservation project, per GFA's regulations.
okay,
What's the actual percentage,
no, go, please.
what's the actual percentage we include for fee? That's one fee and all.
Well, it's a one-time fee, and that's another advantage of doing this extension rather than another application. We don't have to pay the origination fee.
Ah.
So,
Like with the
yes, sir.
origination fee, how that-
Origination
I-
fee was
I'm sorry.
$75,000.
Right, I'm sorry, I don't have that information, but I can get that
1%
for
of the
you.
total loan value is origination fee, so it's whatever the interest rate plus 75,000 on a $18 million loan. That's not gonna really impact that.
Not significant, right?
Okay.
Yeah, I understand.
You ready for the motion?
Please.
Yes, all right. I'll move that the Finance Committee recommend that the full commission approve the modification for time extension and additional funding for GFA loan DW 2020040 in the form of the attached loan modification documents.
I'll second the motion, but I do have a question.
Proceed.
So
Yes, sir.
Obviously, this is basically a fund change order, like you said, because the contractor has some added costs. I mean,
Yes, sir.
Significant added costs.
Yes, sir.
I mean, have we been through the contract, verified that they're entitled to all this, there's none of these things?
Yes, sir. The $3.2 million change order was what was approved by this board at the November 2021 meeting. Right. No, sir. This is not a change order. This is the second half of the original budget plus that $3.2 million change order.
We originally, when we started the project, knew it was gonna be about $15 million before we had the change order. But with the GFA loans, all construction has to be done within 2 years, and at that point, we were gonna do a 4-year construction. So we funded half at the beginning, and now we're modifying it to add the second half.
All right, we also have accelerated the project
Yes.
from 4 to 2 years, generally speaking.
Yes, sir. A little bit over two, correct.
So the loan mod is really a win-win for everybody in regards to
Absolutely.
processing
That's
and
correct, yes.
cost.
Absolutely.
In regards to increasing the loan now to 18.2 million, could you briefly describe what that does to cash flow and term of final payment?
Absolutely, yes, sir. As we said, we've accelerated the project, but we have budgeted for the full value of the $18.2 million debt service because Mr. Burrows, in his forward-thinking nature, realized that we would be having this change order come forward before the board. So we're already funded for that. So we know that the master plan will absorb an accelerated project when it comes time to do this again. That was one of the reasons that we decided to go ahead and accelerate the project from the 4-year to the 2-year time frame. So we're looking not only in the immediate future, but in the distant future as well.
And we do not
Okay.
start repaying principal till the project's complete. So we just pay
It's
interest on the amount drawn down until the project's complete, then we start repaying principal.
Right, and so to summarize all that, we have already budgeted
Yes.
the cash flow for
That's
this,
Yes, sir.
which is a good thing. It's not a surprise. It's not an additional budget item.
That's correct.
We've already pre-planned that.
Yes, sir.
Thank you.
Thank you.
So we have a motion and a second. Any other discussion, please? I'll call for the vote. All those in favor? It carries 3-0. Thank you very much. The final item on the approval list is fiscal year 2023 CityWorks Enterprise License Agreement Renewal.
Yes, sir. The CityWorks system, which is owned by Azteca Systems, they're the software developer, is our asset management and work order management system that is used by our field staff. We've been using this for 7 years now. Each year we have an enterprise license agreement. Previous years have been $42,000 due to what they deemed costs that have increased on their end. They have added a 5% adder to all of their ELAs this year. So that gets us to a total renewal agreement of $44,100. This is paid for out of the individual staff operating budgets based off the number of users per department. So we pay them with one check and then split all the costs out into the individual operating budgets.
Okay. The chair will entertain a motion.
I'll move that the Finance Committee recommend the full commission approve the renewal of the fiscal year 2023 CityWorks Enterprise License Agreement with Azteca Systems, Inc. in the amount of $44,100.
Okay. Just a question to reinforce my understanding. this asset management platform that we're using, this is one that we identified a number of years ago. We chose to move to this because it would be essentially our means of really managing the assets or tracking those assets. The other is our intent going forward is for a long-term relationship with Azteca Systems because of our use in their system, and presumably they market these same platforms to other utilities like ours.
Yes, sir. CityWorks is one of the top 2 or 3 premier software, asset management softwares in the water business right now.
Okay, so what we're approving is this is really just a maintenance fee as we
That's exactly
ongoing
right.
for using the system.
They have warned us that there'll likely be another increase in next year's at this point, but they gave us a heads up 12 months in advance on that.
Okay. Other comments, questions?
I was fortunate that I was able to get a demonstration arranged through Andrew for this, to see how this works. And I think it's one of the most valuable tools that the utility has in terms of generating information and knowing about our assets and the flow of work. It just does an amazing job. I was very impressed by the software. It's very well developed and along in its stages. So it's a real valuable piece and it's a good investment for the utility, I think.
It's also how we manage our inventory. Obviously, the financial costs go on the financial statements, but we manage the inventory through the CityWorks program as well.
What are our rules regarding contracts? Like another time you're saying,
25,000
so anything over 25,000,
has to come to you.
even if it's not, even if like an annual.
Right.
And so this is coming because it's technically it's 25, even if it's annual.
Right. That's correct.
I would say, side note, unrelated to this, or later, we're pros by this, but not necessarily later, 25,000 sounds low to me.
I'd concur, and that's probably something we want to pursue as of an ordinance update, ending this fiscal year.
I mean, if it's budgeted, if it's in our operating budget, if it's not, I mean,
Right.
capital is one thing.
Yeah.
But I mean, if it's in the operating budget, for you to be bringing, and not that it's a waste of our time, I'm not applying that at all, I'm not saying it's a waste of yours, but I mean, ultimately, it takes time, effort, staff, to put this all together. And, you could have just signed it, and
Right.
you know what you need.
Yeah.
I understand.
I don't know what it takes to change ordinance or rule or what, I mean, it's not. I would argue, I mean, what's the electric bill at Academy Creek?
20 to 25,000 a month.
Okay, so that's,
That's getting up there. Yeah.
1,000 a year.
Yeah.
You know, and you're not bringing that to us. Then
Right.
you're gonna bring us up.
Right.
Yeah.
I think we'll take a person policy.
It's included in the contract. Yes.
Really?
Mhm.
I think we work more about that.
I think that's a good idea, too.
Okay, other comments, questions, please? Okay, hearing none, we'll take a vote. All those in favor? Passes 3-0. That completes our approval list. Discussion items, we have the deposit policy.
Thank you again, Mr. Chairman. In conjunction with the presentation of the fiscal year 2023 proposed annual budget, Mr. Burrows also presented some bullet points to you about some staff action that will be taken in the coming months. One of those was the review of our customer deposit policy. So what we did was we took a survey of some neighboring or some similarly situated utilities, asked them 6 questions, those being generally, do you require a deposit on every account? If you have a single customer with multiple accounts, how is that handled? How do you have, or how do you differentiate, or do you differentiate between residential and commercial deposit amounts? Do you have a credit check process that you use in determining an amount of the deposit? How or when is the deposit returned to the customer? And do you have a service interruption process for delinquent accounts? And if so, what is the role of the deposit in those processes? What we determined was there were some areas where we're very much in line with other utilities, and there were some where we had some differences. So what we did was we took our ordinance. You'll have actually in your read-ahead packet, you have 2 different documents, really. There's an ordinance section that's redlined. That's the first 3 pages. And then the last page is actually the rate resolution redline, because our proposal is to redline the ordinance section to bring some of these in line, but also to have the rate resolution actually be the document where the detail about our policy is held. This will still have public review and comment because it is part of the approval that the board does every June for this particular process. And the ordinance will then have the overview of how we handle the issue. So you'll see in the ordinance sections, sorry, I said the first 3 pages, it's actually the first 4. I had 2 stuck together. You see the first red line that's proposed in the ordinance section is, previously we had a letter of credit policy that we could apply to customers with multiple accounts. We didn't really have any customers taking advantage of that, so we're looking for a different way to handle that. So what we're saying is we're going to look to the rate resolution for that. And actually what we've done is we've given some ways in which a deposit can be waived in the rate resolution. So let me not get ahead of myself. Let me continue through the ordinance here. So that's pages 1 and 2 of the red lines for the ordinance. Page 3 is just a housekeeping issue. It was termed a turn on after delinquent cutoff fee. We actually don't charge a fee for turn on. The fee that we charge is for turn off because we expend employee and other resources in the turn off process. And then some of those you'll see some capitalization corrections, so we that are referring to the original official document of the rate resolution. And then under the section D where it says deposits will be required, you'll see the red line now says required, credited, or refunded as set forth in the utilities rate resolution. And then Mr. Dormany has reviewed this for us, and he and his colleagues added letter F there for us, just to make sure that we understood that the rate resolution was the document that the board does review and approve each June, and that we are referring to that in its official capacity. So those are the first 4 pages. I'll pause there for any questions about those before we dig into the rate resolution because it has a little bit more meat to it. Hearing none, I'll continue. The deposit language that's added to paragraph A actually was already contained in the ordinance. We just carried it from the ordinance over into the red line. This gives the utility the opportunity to increase a customer's deposit by a factor of 250% if there is a history of delinquency with the utility. We have enacted this. There are customers to whom we are currently charging $250 deposits based on their delinquency. Letter B, I'll just go ahead and read this so you'll have full scope here. Deposits may be waived by the utility under the following conditions. Customer has 1 or more existing active accounts in good standing with the utility. Customer had a previous account with the utility on which a deposit was credited for timely payment as described in section C below. Section C below tells us that if a customer has timely payments with us for 36 months as a residential customer or 60 months as a commercial customer, we will apply that deposit to that customer's account. So the line of thinking there is if we've already refunded the deposit for this customer before on a previous account, we saw them as a good credit risk at that particular point. So if they're coming back to open another account with us, we don't see the need to charge them a deposit at that particular juncture either. Yes, sir, I see a question coming.
How are we how are we defining timeliness?
Timely payments,
Yeah.
no late fees and no delinquent cutoffs.
So I would say that a lot of our customers who get the $20 bills, they probably pay every other month and just double you up.
Yes, sir.
And, we're getting 18% interest for that
Understood.
month with no risk to us really.
Understood.
That's just the way they kind of pay. Is that,
All right.
would that weed them out?
Are you suggesting a different definition?
Currently, yes, that would weed them out of getting
Well,
the
that's kind of
deposit
what I'm,
refunded.
and that's fine if that's your
Okay.
intent, but I don't know that that's really our intent.
Okay.
If you get a $25 water bill, I would say a lot of people, Andrew and I were just talking about a case the other day when somebody thought they had a leak because of, it was just a payment schedule. And frankly, I pay like that. I'll just be honest. I don't.
We appreciate your 1.5%,
Right.
sir.
It was 18%. You get 75
Understood.
cents a month, whatever.
Right.
And if that's the intent to weed it out, that's fine. But I just,
I
I feel like a lot of our customers probably, pay every other month and if that's not the way you want them to do it and just weeds them out, that's certainly fine. But it's just a point of conversation.
So, would you like to propose a?
Just asking what y'all think.
It would be our preference that people paid every month.
Yes, sir.
Yes.
Rather have
course.
that 18%.
Well, it's not the 18% we're looking
It's
for, it's the
the
timely payment that we're
timely
looking
payment,
for,
yes.
so.
If you forget one month, it's easy to forget the next month, and then you run up, and we have to cut you off. We don't want to cut anybody's
No,
off.
I get that, but I
We
mean,
really don't.
I get that, but, you know, I don't know what percentage of our customers do that, but I bet it's a big
Understood.
percent.
What percent? You-
No, sir,
Oh,
he
you
said,
think-
I don't know what
think-
percent, and I
you
said,
think
understood.
there's a lot of customers that don't pay?
I'm acknowledging his
Oh,
comment.
okay.
You gotta write a $25 check every month. A lot of people probably write a $50 check every other month.
It does. Well, a lot is a subjective number, and I'm sorry I don't have the data to back it up as to what the
It
specifics
is
are for
not
that, but it
uncommon.
does, right, it does happen,
It
yes,
is,
sir.
Okay.
And we would not cut a customer off in that particular situation because they're still under the, right,
They're well under $100,
right.
you know, but I mean, it's.
Are these the customers with the leaks?
We're working on that too, Commissioner. The recurring payment versus the check, I'm sorry, I don't have those numbers, but again, I can bring those to you if that's a,
50 to 60% pay by check, though, right?
Well, let's do this.
We
Let's go
would
through
prefer the more do.
Interesting.
the changes proposed to be
Yes,
sure
sir.
we understand that, and then we can
Agreed.
chase some other interest.
Yes, sir, I appreciate the redirection there. All right, so we're back to letter B. Let's see, review by a professional bad debt management service indicates that a customer has 10% or lower potential delinquency risk. Several of the other utilities did use credit checks for the determination of a deposit policy. In our particular case, we do have a bad debt management service that we use that determines a potential credit percentage risk of that particular customer. We can use that percentage to determine if that customer would qualify for the waiver, or the next bullet point, basically if another utility has already waived a deposit for you and you can provide the proof of that occurring, that we'll consider that as well. So
Do we
one or
pay
more.
per usage on
Yes,
the-
sir, per usage.
Okay.
That's correct.
All right.
So if I summarize all this,
Yes, sir.
the intent is try to align our practices and policies with other utilities in the service area.
Yes, sir, and some of the feedback that we've received from the board as well.
Okay.
And to some extent, B1 and B2, what's that, contradictory, because they're not, but I mean, it says if the customer has one or more active accounts in good standing with the utility, good standing probably is not, I mean, good standing probably is that it's not.
And been disconnected.
Right, exactly. And then the next one is, that in the past, if you've had one that you were, say, good standing, it says that every month that time of pay.
We could look at that language, certainly.
Yes, sir.
That was more set up for people that are maybe living in one residence, live there for 8 years, or in good standing, then move, so they don't have multiple accounts at that point.
Right.
Where the first one would be more for people that have 6 or 8 accounts.
Right.
So,
And they don't have the same.
right, I
Right.
understand.
Or you lived at your current residence for 5 years, and within those 5 years, we refunded your deposit because of your good payment history for 36 months. But then those last 2 years that you lived there, you didn't have a deposit on that account. So when you transferred to your new address, we didn't have a deposit that we could transfer. But under this language, we wouldn't charge you a new deposit at your new residence because of the fact that we had already,
If you paid every other month,
well, again, it goes back to the definition that you choose to use for
That is
timely
correct.
payment or
Currently,
in good
if you pay
standing.
every other month, your deposit's not refunded, so you would be charged another deposit. You are correct.
Okay, here's a thought, is I think directionally it's appropriate.
Thank you.
The big deal is probably on customers, well, it can affect customers who are low consumers because they may have greater difficulty making deposits. But I think of a commercial account, for example, that a customer has multiple accounts with us and is in good standing,
Right?
no matter what the definition is, that we should demonstrate good business decisions on those, and which, in my view, this direction suggests that we would not ask for a deposit on another account while they have multiple accounts in good standing with us. In my view, that's good business. That's a good pro-business signal to be sending out to the community. And when I say pro-business, and I don't mean that just for people in the commercial or industrial account, but someone who is residential the same way, doing good business with them. So directionally, I like the approach, and perhaps there's some nuances we may want to look at that can take out some of the wiggle room, if you will, to make it absolutely crystal for the benefit of our customers, for whichever category they may come up with. Commissioner Stevens brings a good point. In my view, it'd be worth reviewing.
Yeah, and the reason we brought this up, like, because all businesses, frankly, even the hospital,
Right.
every time we go, we got a $20,000 bill, and then we go to turn something on in the doctor's office.
And a deposit. Yes, sir.
It just bogs it down.
Right.
Business have to go through a county process.
Sure.
It just bogs it down.
I appreciate
But
that.
I think we need to tell it to the customers, to the residential customers too. If you're moving around, somewhere in the county and you're getting water included with it, I don't think you should have to pay a deposit if you have consistently paid your bill. And it's never been late to the point of a
That's right.
disconnect. I mean, somebody pays once a month, once a quarter.
Yeah, and absolutely, and I just reinforce the comments Commissioner Stevens are offered is specifically in here you line out the definition of the customer or segregating them by residential or other. It's just customers.
Customer.
So I like that the deposit policy will apply to all customers based on their stewardship in paying their bills.
That's right.
So,
We were asked to prudently manage risk, but also respond to the needs of the customers. So those are what we were talking
They're
about.
probably more likely than anybody to be late.
Understood.
I mean, a lot of times,
Just the processing cycle, right?
the processing cycle probably is, not that they're not paying it, but I mean, they're 2 days late on weed them out from being able to, if they change locations, they start a second location, also they gotta get a deposit because it's 6 out of 36 months, so 3 days late.
The largest customer we have has never paid a bill without paying a late fee on it.
Right.
Just, no, you're not you.
And the longer times of the post office now
Yeah,
have an
that-
effect on us too.
That does impact us.
Because it's 5 or 6 days to get it.
well, again, I think directionally, it's very good, and if there's some polishing, that would be an improvement from an operational standpoint. I say charge ahead with it.
I will say this would be, oh, go ahead. I was gonna say, we'll make these adjustments. We bring in the June meeting, the rate resolution, so the hope would be to bring these back at the June meeting, but we also would have to go through the ordinance revision process, which would require that to be approved by the city and the county as well, before we could officially enact it.
Right, and prior to the June meeting, before you drop that whole
Right.
rate resolution on us, please advance that
We
to
will.
the full commission so each commissioner can review it well in advance of the meeting, and we'll be
Certainly.
fully prepared to make the vote.
So on the
Yes, sir.
side note, I mean, and Andrew brought up a good point, we could potentially do it now, but, we said the biggest customer we have takes a late fee every month. What is our turnaround time from the time the bill goes out to the time it's due?
Well, if you're paperless, it's the same day. And you've got your,
How many days is the?
oh, it's
the till
20
from-
20 days to the due date, 30 days you're considered late, and then the delinquency cycle kicks over on the second bill, assuming you're over $100.
Bill was generated June 1st.
Yes, sir.
You have till July 1st to pay it, not February.
Yes, sir. Correct. Well, there's a differentiation between being delinquent for cutoff purposes and being delinquent for late fee purposes, I believe is the
To your point, we don't cut
differentiation.
anybody off unless they're $100 or more in arrears. So almost all of our customers, you had to be a very high water user to get cut off for not paying 1 month. Typically, it's at least 2 months of not paying before you get your water cut off.
There's actually a grace period of that 10 days
Yeah.
because the 20 days is the due date, but the late fee is not calculated until the next bill is produced. So between your due date of the 20th and your actual 30 day of the 1st, you still have that grace period.
Of course, the people who have e-bills get their bill the same
Same
day
day.
it goes out.
Exactly.
Yeah, I mean, it's not for residences, that's not, I mean, a lot of organizations just,
We're trying to encourage more and more of our customers to use our paperless billing.
Yeah.
sure, but either way, I mean, still, organizations a lot of times it takes
Understood, just the process of getting a check cut within a large organization.
Goes to somebody for approval, it goes from there to the
Yes, sir.
county, it goes from there to check.
That is why we recommend, or we tout ourselves to all of our contractor partners that we pay quickly.
That's right.
Yeah.
That's exactly
Because I know if
We
you,
prioritize those payments because
if
we
you
know that
pay,
they will take a
if
while
you
to
pay like on Bank of America, it may be a while when you say pay the bill, that may be a while
Right.
before they actually mail out a check. Do they mail checks to you?
I
or
appreciate
do
you
they do it
making that
electronically?
differentiation, yes, sir, because what the customer doesn't sometimes realize is when you do an online banking, we'll call it.
Right.
Payment through your local bank or credit union.
Right.
Typically what happens is that's an electronic transaction between your account and their account, but what they'll do is they'll still cut a paper check, mail it US Post Office. So it's the same delay getting here as a paper check you would cut yourself.
Right, and I mean, on big organizations, they usually go out very quickly, but on smaller organizations, it takes
Takes some time. That's
And
exactly
you
right.
don't get anything electronically from the banks that way if
No,
if
sir.
the customer does that?
No, sir, it's all
Is
paper.
that an option to have an electronic?
It's another service that we would have to contract for because there are agencies that will take those transactions from the bank, turn those into an electronic transaction that comes to us.
Yeah.
But there's a cost of doing business that way.
But the claims would be processed more quickly there?
Yes, sir.
Yeah,
Yes, sir.
so the money would hit our banks, very, very
Correct.
quickly. Okay.
Other questions or comments about the deposit
No.
policy?
Nope.
Okay, thank you.
Thank you, Mr. Chairman.
Very much.
And we have the financial statement for the month end. Ms. Wilson.
Good afternoon, Commissioners. The item before you is our financial statements as of April the 30th, 2022. First up, we have our balance sheet, page 1. At the top, we have cash and cash equivalents. We are at $3.6 million as of April the 30th. We had submitted a loan draw from GFA for both projects at that time. It did not get received until this week, and since then we've also submitted another loan draw. So our cash has dropped a little bit. Capital assets, or fixed assets, we have added some fixed assets to our fixed asset register. When I say fixed assets or assets, we're talking capital, as in vehicles, machinery, infrastructure, some projects, or capital contributions. As of April the 30th, our capital contributions, which are dedications, is $924,098. Construction in progress, we're at $34.7 million. We'll talk more about that on the project report. Page 2. I don't have any talking points on page 2. Do y'all have any questions about the balance sheet? Okay. On to page 3, our summary revenue. Our net operating revenue is $1.7 million, and that's in alignment with where we were this time last year. The operating revenues themselves is $688,000, and that's over our projected calculations. Again, we take into consideration our interest income, which we have the short-term investments have helped those numbers, and we also have some securities that have matured. Other income includes tower rentals. We've had some amendments to that since last year. I think we've had 2 in the past fiscal year that increases that other income. Rental income, $5,500 a month for the former CBS building, and our GFA loan forgiveness is recorded under other income. Capital fees, we're at $2,181,000. That has exceeded our June 30th, 2021 year-end numbers as of last year. Last year's numbers for June 30th was $1,962,860. So we're above that by a little over $218,000. Any questions on revenue? Because they are forgiving it, we do have to count it as revenue. So it's non-monetary revenue in terms of that, but it does have to be recorded as a revenue.
I'm glad I'm not the only engineer that don't understand why accountants do things.
Because we submit a certain dollar amount to them, and then they're like, okay, you're only gonna have to repay this, but since you're not repaying it, you gotta record the other portion as revenue.
Right.
Yes. And we don't know what that number's gonna be, so there's no budget amount for that, and even in the upcoming budget, there is no budget amount for that. It will just
But it's good
be
news.
revenue.
It's good news.
Yes, it is. And that loan forgiveness is on the CW project, the Academy Creek project.
In regards to the capital fees, this is recording 10 months.
Correct.
And the FY '21, that was 12 months. So we still have a few more months to gain on that. So it's
Yes.
going to be a noteworthy increase.
Yes. And that
Our
will
community
probably,
is definitely growing at this point.
and we'll probably see those operating revenues again over projected budget.
Okay?
Page 4, expenses by division. Again, we have our net operating revenue at, let me turn the page, at 1.7. Our operating expenses, we are under budget by a little over $1 million. We have a little over 800,000 in encumbered purchase orders, encumbered funds for purchase orders. Our under budget line items, a mixture of these departments, personnel across the different divisions, group insurance, finance takes care of the group insurance line item, and of course the interest expense for the VACONs. We only had to pay the interest expense for 6 months, but we inadvertently calculated 12 months into the budget. The over budget line items were technical expenses, purchased electrical services, and some biosolids. Any questions regarding expenses? Okay. Page 5, supplemental schedule of cash balances. Across the top, you will notice our distribution of funds. We have our overnight cash that is being held by Truist. Investment accounts is currently being held by Synovus, and our trustee held funds are currently being held by the U.S. Bank. Our checking account, payroll account, and our group insurance, those have small balances. We only transfer funds into those accounts as needed, so we have a little cushion there if needed in an emergency disbursement. Bond sinking fund is $2.6 million. We do have a draw of principal and interest on June 1st of 2.5. Our elective reserves are kind of holding. Page 6, our bond trustee reserves, that contains our construction fund and the debt service fund. We will have a payment on the 2021 series bonds on June 30th. I think it's like $250,000, and those funds have already been set aside for that. SPLOST account, we're currently at 1.4, and we should have the investment account drawn down to 0 by June 30th. Any questions on cash
That
balances?
also means we'll be finished with that project by June 30th.
Be very, very close. We might have a little bit over the SPOS budget, but be very, very close.
Yeah, that's good.
Okay, page 7. Project report. Our year-to-date, of course, is 34.7 million. We have completed some projects. Project 2003, which is CPOM CIPP, and 2011, which is the SCADA lift stations. Those projects have been completed and capitalized, which means the expenses have been taken out of construction in progress and moved to fixed assets. Project 2009, the CPOM's East Water Line, that is a SPLOST project, but those funds are still with the county, so we, as those pay apps come in, those expenses, we submit those to the county for reimbursement. Project 2027 is our public safety complex. That project is complete, and we have received all of the reimbursement dollars from the county, and we're waiting for that to be dedicated. So that will come in as a capital contribution. Project 2107 is our priority basin. That was completed June 30th. It just has not been capitalized. Our year-to-date expenses for our capital projects for this fiscal year, we're at $19.4 million. If you move to page 8, I've highlighted our total expenditures for reserves and for the GFA projects. They're both currently like 50-50 split for that $18 million. $9.9 million on the reserve projects, which is R&R, the CIF reserve with SPLOST, and the 2 GFA projects are almost $9.5 million in expenses. Any questions or comments?
Thank you.
All good, thank you.
Thank you, that's wonderful.
Capital improvement fee. So, one of our discussion items.
Yes, sir. I'm looking for some direction. I sent the commissioners an email a couple of weeks ago, mentioning that I'm looking for some direction on how the commissioners would like to structure the connection system policy. I mentioned that one option is to create a new service district and not charge capital improvement fees in that district, but instead increase the rates in that district. Another option is to amend the customer assistance program, possibly to include assistance with SIFs in that district. That's it, turn my mic on.
It's on.
It's on. Sorry, I'm not close enough. Is that better? Well, anyway.
There you, how about Andrews? Maybe that one.
All right.
Maybe.
So, yeah, those are the two options I've presented. I'm happy to. This is specifically for the areas that we're adding new services in.
That was the goal, was to allow people that weren't previously able to connect. Now new lines are in front of them, they can connect at this point. A couple of months ago, I presented an option where we could finance those for them. There was some consideration at that point to not finance it and do some other options. And so that's when we got Charlie involved about how do we want to approach those customers. Financing's still an option, and we can start that, pretty soon. But if we don't want to finance it for 7 or 10 years or longer for some of our lower income customers, what other options do you want us to consider?
Personally, I'm just saying, this district, you're gonna have a higher rate. One is, it sounds like the county might better keep up with it. Maybe not, but it sounds like it is, it sounds like we're paying.
Yep.
If you have multiple of them that each have separate rates, it could be cumbersome. It's doable, but it's
And also, if somebody moves from here to there, now all of a sudden we got to explain to them, wait, why my rate go up significantly until I move from this district to that district. And, they're not the ones that pay the tap fee, or that would have absorbed that tap fee. I mean, somebody has a house, they defer their tap fee, for lack of a better term, then they sell their house, somebody else moves into it, and all of a sudden they realize they're getting the bill at a different rate. To me, that's just a nightmare. I'm not personally a fan of that, saying that we're gonna have a new operating rather than income. To me, if we were doing that, I don't know if it would make sense to have a loan that's tied to a certain amount of time.
Question, very good point there. Could the improvement district be a virtual district, not specific to each premise, but let's think of a neighborhood where address 1, they pay their fee, so they don't want to pay a higher tariff. But address 2, they need some assistance, so we put them in the district, and it's a virtual district. So only house number 2 is paying a higher rate. And each person who participates that way pays a higher rate because they are in the improvement district because they're taking advantage of this, whereas those who pay cash up front, as a new subdivision would, for example, they're not in the district.
So you're suggesting that customers could make a decision to be in the special district?
Right, based on their decision to pay the capital up front.
Right.
Or have it sort of financed through a higher rate.
Right.
So,
that
so
was
there
my
wouldn't be
point.
any other finance charge, it would just, their rates would be higher for a period of time?
Right, and purely for discussion, of just kind of blue sky here for a
Right.
few moments, is
Mhm.
that instead of defining the district as a boundary geographically, it would be a virtual district, so people who take advantage of that in the defined areas of expansion into these old areas not previously served, that the ones who participate in not paying the fee up front
Mhm.
would simply pay a higher tariff.
Remind me how we're taking this.
The expansion's coming from, bond fund.
So,
It's under bonds, it's not a grant, it's not lost.
Bond fund.
so I don't know the answer as to whether we can create a virtual district, but I don't know, practically speaking, how that differs from financing the SIFs. Because they'll essentially be opting into a higher rate, which would be the same thing as financing.
Just when you're doing that, it's variable versus monthly fixed fee.
Right.
Same thing, monthly fixed fee.
Well, the financing option was a monthly fixed fee, and to avoid the consideration you had where somebody moves and then somebody new comes in
Mm,
that didn't agree to that,
right.
the financing option, we said we were gonna put liens on the property so that if it's sold, we got paid in full at that point, and somebody else didn't have to pick up that debt, so to speak.
But the same thing would be true in a virtual district.
Right.
That if someone sold their house in 2 years, then the person coming in, does that have to be paid off, or do they pay a higher fee for something that they weren't involved in?
There's a difference between paying a fixed fee for a loan recapitalization.
Right.
Repayment.
Right.
And saying, instead of paying $7 for 1,000 gallons of water, you're gonna pay $9.50 for 1,000 gallons of water.
Right.
Because it's very every month.
Right. And is the tap fee going to change over the years? Is it,
It's possible.
Well, possible.
right, so,
County did when they expanded this area, they didn't have it before. They said, hey, we're running a water line by your property, you want on, get on now, if you don't make a decision right now, then in 6 months you'll pay a capital fee, you can say. I'm not saying to do that, I'm just proposing it, I mean, that's what they do. I mean, they sent letters out, they called and they said, we are fixing to bypass your property with a line, you want on it, it's yours, if you don't, you come back to us in several years, and we'll charge you that fee.
and there was no tap fee at the beginning if they signed in? Okay. How much is the tap fee on average?
Well, for the,
Residential?
That fee you're paying, because they even allowed you to do some vacant property.
Okay,
Just go ahead and put the meter in right now, they set it for you.
I see.
But you start paying operating fee.
for
You
most
did.
of our minimum bill.
Yeah.
We'll pay it.
still pay the bill,
Minimum bill, right, every once in a
Right.
while. I mean, I had several, so I had to make a decision, how many I want to jump on, at what point did I think I drove enough that I didn't want to pay minimum bill.
right.
Yeah, I mean, I personally, I mean, at some point, I mean, we're putting the system in for a reason. We put it in, try to get new customers.
No, that's not an option right
Not an
now.
option, no, we do it.
Which kind of, I mean, they.
I think that would open that option up, but I don't know that that's an option we need to make
I'm
available.
not, I'm sure that it opens that option. I mean, this is a strategic road that we decided that this is where we're gonna grow a system. I'm not saying just give everybody free taxes, but that all this stuff.
How much were the tap fees on average for like
For a
residential?
5/8" meter, so the reason this came up was because we're fixing to do the Arthur project.
Right,
In that situation, most of those customers already are on our water system, but they're on septic tanks. They're on 3/4" meters, and so a 3/4" sewer connection is about $2,500.
mm-hmm,
If you got water, about $2,000, you got water and sewer, it's about $2,800.
right,
If it's 1" It's $2,300 for the water and $4,500 for the sewer.
Right.
Yes. But the overwhelming majority of our residential customers will be fine with a 5 inch by 3/4
Yep.
meter.
Right. And they have other expenses in terms of actually hooking up then.
And that does not cover the cost to actually run it to their house.
Right.
It's just to get the meter set or to get the connection. On the sewer side, you've gotta get a plumber to come in, an underground contractor to come in and tie into the plant.
Right.
We're gonna stub out either way, so you'll be there for
Alright, so we really have no cost
four.
allowing time versus.
The capital improvement fee goes to,
No, I'm not saying that. I mean, I agree there's overall overhead for the whole system, but I mean, for that one individual customer town,
they pay an inspection fee that we go, we have to inspect the connections, everything like that.
but other than that, we're not buying pipe.
It's to offset future expansion needs.
To me, there's a difference between us and one of the reasons I feel is a difference is because at some point 40 years ago, when we expanded in their area, I don't think we started to do that with existing customers who've been on the system for 40 years, they probably don't know that. I don't know, man.
I don't know, Commissioner.
To me, there's a difference between us saying, hey, we're gonna go out, because the other option is a lot of these people from town.
Understand?
Well, it would vary from area to area, basically.
They'd have to tie on when the septic tank failed, they filed for a septic tank permit, they would be within 500 feet, they'd have to tie on that point.
So it could be delayed. There's no time, that is a time frame. Is there an actual time frame without a failure, or is there? If the septic tank,
Technically, according to Glynn County ordinances, we can make anyone within 500 feet tie on within, I believe it says 60 days. That has not been enforced because
yeah.
there are hundreds of properties that may impact immediately.
Well, I think it would create some hardships for some folks, so we haven't chosen to push that one.
right, I wouldn't think so.
We've
Right.
we've just informally adopted a practice that once a customer or a premise, once the premise septic tank fails, they can't get it approved by the health department.
Right, then they would need to,
And so then that's time for them to exercise a connection to the
right.
utility system.
I'm not opposing either of them, that's the question, get more information. I realize it depends on this and a lot of that, but in general, how much will it cost the customer to hire a contractor to tie in our system?
Just sewer only, if they're other area water customer,
To bypass their septic tank, which run our pipe.
counting the connection fee and everything, probably $3,000,
Not counting our fee.
not counting our fee,
Just-
$1,000, $1,500.
That's just for sewer, and the water would be additional, if they're,
Probably similar for a water.
Yeah.
Yeah, it depends on how much pipe it is, if it's in the backyard versus the front yard. It
right,
just
sure.
a number of variables. But
I'm thinking of my house, thinking it's a good distance out to the street.
Yeah, and if you look at ARCO as an example, septic systems are in the backyard. Sewer's going to be on the street side,
Right.
and so to go around the building, it's probably going to be about $1,500 in pipe costs, digging,
Right,
restoration, all of that,
Right.
and then the water line would probably be 2-3 sticks of pipe to run out there in a trench. So
right,
that's going to be probably another $500.
right,
So.
yeah.
Yeah,
Well, yeah, at that location, yes, but just in general,
They're
something
on water
similar.
now, yeah,
You know, in a subdivision out in the county, lots may be a little bit bigger. So if you've got to run 125, 150 feet to the street, that's just going to increase significantly.
yeah. I'm feeling like the financing is probably the most viable option for people at this point, rather than creating a district and doing that, but I do too. Yeah, but I don't want to make it a big, long stretched out thing. I think it should be a little bit shorter time than I think originally proposed.
Yeah, originally, we gave options up to 20 years. I think the
Yeah.
feedback was nobody wanted to do it more than 10 years.
I don't think people live in their homes that long, generally, although there's exceptions.
Especially if they're gonna get hit with $1,500 just to tie in. Most of the people don't have it.
So,
if we had a bunch of people in Arco, for example, or any other neighborhood we were doing this in, it may make sense for us to contract for the actual installation so that they have a guaranteed rate instead of, customer A at 123 Main Street pays $1,500, customer B at 124 Main Street pays $3,000, because he got a different contract.
Yeah, yeah,
Oh,
we
you
can
mean to us-
facilitate that.
mean for us to come in and do the
We
entire,
wouldn't do the work, we would just contract with local
Contract,
contractors to
but
do
at a
it.
guaranteed rate? Yeah, because there could be predators, contractors that are
Always an
predators that,
opportunity for
yeah,
that to occur.
sure.
So the direction we want to give Charlie is, based on our discussion, is that we see as financing relatively short-term, 5 to 7 years would be the duration, and that we would favor financing over a special district.
That's what I like to.
I mean, I don't think you should be able to go anywhere in the world.
Well, what we were basically off of originally was if it was an existing structure. If you're building a new home, you gotta pay the property. If you got an existing structure,
Yeah.
then we can finance it for existing.
Yeah, that's the intent, is to go to these areas that are isolated to where we're expanding into to facilitate now utility services.
But to that point, even if it's an existing structure in an area that we're not expanding into, this is not our system. An existing structure, maybe an existing structure that's, you put a look back at 40 years or something. It's gotta be a 40-year-old structure or something.
Septic system instead of saying existing structure.
If somebody
Yeah,
else,
right, yeah, there you go, right.
Right.
Exactly.
Yeah.
come on septic or private well.
So,
Currently on septic, and you are abandoning your septic time in our system, we'll finance it for a certain amount of time.
Charlie, is that enough feedback for you to craft a policy that would be workable?
He's already got that.
We got a massage, we'll give you the once over, but
Right,
we're
yeah.
Okay.
I would think
Right.
from a billing standpoint, that's more practical too. Much better,
Right.
yeah.
Good. Other comments?
No, I'm fine.
Okay, we're good? Good consensus. Let's move ahead. Thank you.
All right.
Then we have item 4, comp study discussion.
Sir, given an update, we have had a struggle getting our compensation study completed, but I am happy to report that we had the first contact with them about a week and a half ago now for, it's the first time we had heard from them since November. So we've had a 6-month delay because we have not been able to get in touch. And what we have discovered is that they, even as an HR firm, are having staffing difficulties right now. So they've lost about 3/4 of the project team and had to refill those positions. So we have new people on board. They seem very energetic and engaged. Unfortunately, 6 months means we've got to go back and redo not any of the data we did internally. They want to recheck the data that they've acquired from other utilities to make sure that's still valid and not be using, which at this point would be 9 to 12-month-old data for that. So we're getting weekly communications from the new project team, and we're finally making progress on that, which is good to see.
If I may?
Please.
The reason why I brought this up is because I think it kind of ties in directly into what's going on with our open positions and everything. And what's obvious from my time here is this utility is moving forward very well. I mean, we're doing a lot of projects, and it's very visible to the customers and to the community, to the community. But there's kind of an underneath project going on here, and that is that our director has been spending a great deal of time changing the work habits of our employees from reactive to proactive kind of work. And that's not something that the public sees, but that's something that we know is going on. And I think the number of open positions is kind of puts this in peril, because we got a lot of people working a lot of time, some overtime, doing a lot of multiple jobs. And I really think the compensation study is going to be our end goal, to try to make sure that our employees are going to be paid commensurate with other utilities, and regionally, and our local competition, I guess, would be the county and the city, that we can be commensurate with that. And again, I mentioned it last month, I look on Indeed.com, and if you can wash dishes for the company that does the food service for FLETC and make $16 and change an hour. If you stay 90 days, you get a $1,000 bonus. and your pay goes up to $19 and change an hour on October 1st. So, I mean, our competition now is very different than it was 3 years ago. 3 years ago, a lot of people were making $8 and $9 an hour, and we seem nice, but now other people are kind of moved up higher, and we seem to be here. And so I think really our entry-level people, which is what I think, if Andrew's that correct, those are the people we're having a hard time filling positions with. And I'm not suggesting we're not trying, because I know we're taking applications and screening people and doing that. And it's just a problem that everyone's having. It's not unique to us. I think it's unique to the times. I think the pandemic has done amazing things to our psyche and to our economy. It's just changed people's attitude very, very much so. And I think it's going to change eventually. I don't think it's going to be like this forever. But I think the compensation study is going to be something that we can grow from if we can make sure. And I think the employees will feel comfortable too, knowing that that's being done and that they're being looked at, because we have this money that we're not spending right now. And I think we also have to make a decision. I think our director and our two directors here have to make a decision about what are we going to do with this extra money that we're not spending for all these employees that that are not working now. Or what are we going to do with that money? Are we going to maybe give a bonus to employees that are here for all their extra hard work, or something that's going to be? I know last year we gave money to the pension fund and we actually put some additional funds in the self-insurance plan. But this year, my preference would be to focus on our employees that are here, that have been working so hard, that worked through the pandemic, that actually put themselves at risk, and that are out there every day working so hard out in the elements. And so that's kind of where I'm going from. And of course, I'm up to you. But those are my feelings about what's going on. And I think the employee compensation study is going to be the start of a big change, and it's going to be moving in the right direction.
I mean, I agree with you, but we gotta have that. We gotta have the data. I mean, we can't just.
We do.
We can't just.
Yeah.
We gotta have, good data to
Yeah.
make those decisions with. And, we've been pushing, or you've been pushing the people to get to it. We need that, like you said, as soon as possible. And then we need to have HR meeting when we get it. But we need that data before we do something. But we don't understand where we need to put our comp, because we might not be able to do. I mean, what we don't want to do is just across the board, even for everyone. We need to put it where it's needed, where we're having challenges. Not saying that everybody doesn't deserve something, because everybody certainly needs a raise. But there might be some categories that we're having a hard time recruiting for that's just market driven, and we have to increase that wage disproportionately to others. But also, I mean, I would argue if we've got positions that have been open 6 to 8 months, we need to take a hard look at what those positions do, and decide if that really is mission critical or not. I mean, if you're without something 6 months, I mean, what's the difference in 6 months and 6 years? I mean, at some point, if the position has been vacant the whole time, and we have not had service issues, we've not had revenue issues, we've not had issues associated with that position being vacant, obviously we don't want to overwork somebody else. But I mean, in general, if the organization is running well without those positions, we need to take a hard look at those positions and decide whether they're needed, so that we can spread that money around to other areas, whether it be the pension fund, whether it be other employees, whether it be repairs and expansion, or system reliability, or all the above. We need to look at each position every time it's open. Even in a good economy, we need to look at every position every time it comes open and decide whether it's truly. And I would argue that the people that are probably sitting around the table in private business probably do that. If you've got an employee who leaves, you probably, before you replace it blanketly, you probably say, wait, no, do I have to have this position? Is their task mission critical to the organization? Is it something that somebody else can absorb and us reward them accordingly, et cetera?
As a side note too, at Georgia Water last week, they had a talk and comparing water and sewer operators rates and all with power company, other utilities, not water and sewer. We're much lower than what the power industry. Somebody works for Georgia Power and places like that, and they're just a utility just like we are.
Mm-hmm.
So
to fund
that's overall systemic in the entire industry.
That's right. But to close that gap, the money's got to come from somewhere.
Yes.
And if we've got other positions that are not mission critical, and I'm not saying they're not, I don't know, but I'm saying that we
Yeah.
need to evaluate. By no means am I saying these positions aren't important, I'm just saying we need to look at it.
I think you're right. I think we do need to evaluate whether, that's always the first thing that managers do, is when a position comes open, decide whether, the work can be distributed other places, or you do need this person. But like I say, my feeling is that Andrew has spent a long time changing the mentality of particularly the people that work in the field to a proactive stance. And it's been, I think it's extremely positive. I think it's probably the opposite. The utility that I was sat on the board for before is completely the opposite. It wasn't proactive at all. And I think it's one of the best things that's happened here. And, if you don't have the staff, though, it's going to be harder and harder to do those kinds of things.
Well, to your point, in one of our areas that we've had a lot of vacancies, they've had to pull back on some of the proactive things simply to keep their head above water on the reactive things. And so
Right.
those positions, obviously, to your point, being mission critical, if we want to maintain that level of service of being proactive, we're going to have to fill these positions, and trying to every single day, because these guys are doing everything they can. I always tell people, as long as the water's in the pipe, everything else is window dressing. And for our customer base, that's the truth, but for our employees, there's a lot that they go through every day. And the fact that we're missing these positions and trying to fill them, we've got some people that are very tired and have put in great effort over the last couple of years, and we're trying to get them help as fast
And to
as we
clarify,
can.
there are certain positions that obviously 100% agree, but I mean, not to be flippant, but at one point, some companies have people that rewind the videos. Well, I mean, if we just keep hiring a video rewinder every time the position comes up,
Yeah.
We're not keeping up with the times. I mean, at some point, companies have people that went around knocking on windows because the alarm clock didn't exist.
Yeah.
At some point, technology moves where you might not need this position because technology can replace it,
Right.
or, somebody else's job got more efficient.
Yeah.
Again, I'm not saying let's not hire water operators and people to repair pipes. What I'm saying is let's take a hard look at every position every time it comes open. Today, 20 years from now, every time there's an open position, that is the time to look at it. Then you're not laying anybody off ever, looking at the position when it's open and deciding whether it needs to be replaced.
Yeah.
And I think every business in the country should do that if they don't.
I think so.
And I
And
think we need to as well.
We certainly do that.
We've got people whose job is to rewind videos when they're turned in.
One thing I'll tell you,
I'm
though,
talking about people who are repairing pipes.
we have a huge benefit here because utility is very different than most government. We are government, but we operate more like a private business. And that's a real big distinction here. And so, I can't see that, we have all these positions open, that they're not something that's needed. I mean, were you guys, I don't know, how long can you stand down in the hole, before you need to get a break and stuff? So, I mean, there's, things that considerations. Maybe each one of our commissioners should go out and spend a day out with a crew and get a little feel for, some more direct kind of thing, but.
I don't think anybody in this room is talking about people who are out in the field as a crew.
Well, let me offer this.
Not what I'm.
Andrew, do we have a sense of when we may get even a preliminary from the HR company for deliverable?
Like I said, just literally got this conversation kicked back off about a week and a half ago. So
Okay.
the new staff members that are working on that are kind of going through what they've got so far. We're scheduling meetings every couple of weeks, so we'll be able to give that update to you soon.
Okay. Let me just offer this. I'm sure it's already on your list, but I just want to reinforce it in a positive way. We do need the data for the commission to be comfortable with the direction that we're going in. But I would also, the caveat is, don't let that keep you from running the utility the best way that it can be run when you have to make those decisions to fill a position or to increase pay for a category to frankly keep everything going like it should, so that the utility service is transparent to our consumers.
Agree 100% with that.
Okay.
For specific categories, if we're having recruitment issues,
Yeah.
let's.
So,
but we
like I
can't
say,
address
don't let us hold you back
Sure.
on making those good decisions. So,
Absolutely.
That's a good point.
Andrew, anything else you want to offer about the compensation issues or concerns?
I will say one thing that we have started doing, and everybody, you try recruitment ways and different ideas, and we've tried posting on the website, newspaper, doing some of the other job sites, and we tried Indeed about a month and a half ago. We've been using ZipRecruiter and LinkedIn and some other stuff, and we have been getting an abundance of applications through Indeed. Now, not all those individuals seem to be actually willing to come in for an interview and take a job,
Right.
but we've actually started making some progress in the last 6 weeks because of using that service. So we're paying, obviously, to promote those jobs on Indeed, but it is paying dividends at this point.
Okay.
I have no idea why one website does that much better than 3 or 4 others, but it's doing well right now. It
Well,
is.
it's the hot
You're right.
application at the time.
Right.
It used to be
Absolutely.
monster.
Clarify one point, I'm sorry about that too. I mean, at one time, I believe we hired a lot of extra customer service reps where we had a significant issue, and that got better.
Mhm.
If that is an opportunity, I mean, I'm not saying that we don't work for it, they absolutely work hard, and they are mission critical. But at one time, we were having so many problems, we had to like double the fleet. And over time, if things are better, then we don't necessarily have to keep that same offer.
Oh,
Again,
that's
I'm
true.
not proposing we lay somebody off at all, I'm proposing the position becomes open, we verify. I hear you talking about types and I'm not sure where you got all the types and stuff. I'm not talking about people who are out in the field repairing our wastewater treatment plant, that type of stuff. Should we look at that? Absolutely, I mean, but it should be a 30-second look, I mean, it's common sense that we're gonna need.
Right.
to replace it.
Yeah, I wouldn't be opposed to looking at something
We
like
need
that.
to look at our position, not saying they're not leaving, not saying that you guys job, but I mean, it would be short-sighted of us not to evaluate a lot of roads.
Yes, sir. And we do,
Same thing with vehicles.
we do look at all those.
It'll be vehicle, needs replacement. Before we replace it, it'll be short-sighted if we don't look at the side of the vehicle. Well, infrastructure.
Absolutely.
I mean, that's what we're supposed to be doing every day, is looking at things, decide what makes the most sense. And human resources are our biggest resource, and probably our biggest expense.
Yes, sir. I agree. I will say I do miss having to go to the video store on Friday to pick up a couple of VHSs and take them to the house to see the new movies. I think we should bring that back. Oh, yeah. Now, we didn't have Blockbuster. We had Movie Gallery, but it was a good time on Friday.
Okay.
All good discussion. Any final item for the good of the Finance Committee?
I just appreciate having the discussion about that. I think it's real important, and I'd rather
Thank-
everyone take the time for it.
Thank you for pushing that forward.
All right.
All right, the committee stands adjourned. Thank you.
Let's see, who's emailed me for nothing.